Hello and welcome to a special two-part episode where we're going to be tackling the top 5 financial roadblocks of divorce. I'm Susan Guthrie, your host, and for such an important topic, I have not one, but 2 expert guests to help guide you through the maze that can be the financial aspects of divorce. I know that this is an area where there's a great deal of fear generated for people as they face the concept of divorce, the idea of divorce, because basically you're taking the marital financial pot and you're going to be dividing it. So I know this is an area that for so many people generates uncertainty. They really don't know where to start. So I'm bringing in the founders of My Divorce Solution, which we'll talk about more, but is something that I think is truly innovative and really a solution, hence the name, for anyone who is contemplating divorce to consider. But my 2 guests are Chellew and Catherine Shanahan, who are joining me today.
So ladies, I very much appreciate you joining me and my listeners today. Thank you.
It's our pleasure to be with you and your listeners.
So let's dive into deconstructing those 5 roadblocks for financial clarity, because this is really what that area, as we talked about, that is just so fear inducing for people as they go into divorce. And one of the things that I love about My Divorce Solution is you really break this down into something simple. That it's easy to digest for people. And that's what you've actually done here for this episode, is you've kind of broken down these roadblocks for people. So first off, we want to talk about access. Step 1, roadblock 1.
That is so true. And that creates the most panic, I think, for people, is especially if you weren't the financial manager in your household, just thinking about, well, where do I go and how do I get those documents? And gaining access to financial documents can be super expensive if you wait until after you hire the attorney, or wait until after you start the mediation process, because that not only are you trying to negotiate or work through your issues, but you're also trying to collect documentation. Documentation is the lifeblood of the divorce process. So get statements, start collecting right away. Even if you're not sure of what you're collecting, just start making copies. Too much, there's no such thing as too much in the divorce process. And I also like to remind our clients that when they're collecting documentation, and they go to the financial institution to get statements for several years or whatever it may be, it's really not necessary to tell them that you're getting a divorce or that there's a dispute going on, because that makes the professional or the institution or the person helping you get statements, all of a sudden they're going to be very reticent to help you. You should know that these statements are yours to have. You don't have to have an excuse. So get the documents that you can.
I want to stop you there for one second, because, on the flip side of that, if you don't have enough courage to go and do that, because it is really daunting for people to go to the financial institution and ask for money or liquidate money. However, if you're in that position and you can't do that, then you do want to go to that financial institution and tell them that you're going through a divorce to stop your spouse from having the ability to liquidate any monies. So just remember what position you're in here.
Yeah, that's a very good point to make. So part of the portrait when we're working through that with clients is helping them gain access to their documents. We take them through one step at a time so that it doesn't become so overwhelming, and that eventually it becomes more comfortable to them to start to know what's going to be important. So for purposes of this conversation, we're going to use a 401k plan as an example of the roadblock, so to speak. So Catherine, put the 401k plan into perspective as it relates to gaining access to documents.
Okay. So, with the 401k, if you're not the employee, you really feel like you don't have any access, and you really don't have any ability to call the employer to get that information. So you're feeling behind the eight ball here because you're waiting for your spouse to give you this information. And most conversations with spouses are, that's my 401k. My employer won't let you have that 401k. It has to stay in my name. They can feel how they want to feel, but that's not the truth. If it is considered marital asset, you have a right to that 401k. So how you will notice if you have a 401k might be on your pay stubs, if you've seen your spouse's pay stub. If you see your year-end statement from the employer, you'll notice it on their W-2s. There's a little box there that'll show how much was withheld for the year. You'll also see it on your tax return if there are any liquidations made throughout the years. You'll find that on the 1040 right there on the first page. So there's a lot of places to know that the 401k exists. You also should be aware that if your spouse or yourself has worked for a prior employer, those monies could have been rolled over or liquidated. So you might find that again on past year's tax returns, or you might know that those monies are still there. We might need to find that out. And we'll see that through a lot of past year tax returns. So there's also hiring letters, there's employment contracts. There's a lot of places to find out if there's a 401k. And it's really important to know this because those are also deductions that get added back in for support purposes. That's a voluntary deduction, not mandatory. So it's important to know the differences for that for calculating child support and if you're eligible for spousal support.
Yeah, and it's a great point. I love that you make the point of people trying to pull as much of this documentation together themselves before the process even starts, because people always think, I know when they come through the attorney's door, that we have some sort of magic wand that is going to, we push a button and suddenly we have all of this paperwork for them. There is no magic button. We have to go through filing certain requests for production. We have to issue subpoenas to financial institutions. Every single aspect of that is cha-ching, cha-ching, and it is costing you money because once you involve your attorney in that gathering process, you're paying for your attorney to go through that gathering process. So the more that you can pull together and understand, much as what I love that you're talking about this, not just this general idea of there might be a 401k, but where you can actually go look to see if there's one. That's great information for someone, and this data is probably there. I always say start with the tax returns, much like you just said, Catherine. It's really the place where it's going to start telling you quite a bit about your finances.
It's true, because some things will appear in your tax return that does not appear in your W-2, that may not appear in your payroll deduction statement. So a tax return really is a great place to start, and having several years of them. And I don't care how far back you go, as long as it's during your marital years, if you can access that information, it's very useful.
Yeah, absolutely. Part of the roadmap. Yeah.
Yeah.
Yes.
And for those who feel like they don't have access to their tax returns, it's important to know that if you have an accountant, you're entitled to a copy. So you can call your accountant and get a copy of a joint tax return or your personal tax return. For those who are not sure or you don't use an accountant, a lot of people use TurboTax and things like that. There's a form, an IRS form 4506. The form with the T next to it means transcript, but you can order a copy of your tax return. You can do it right online, or you can do it through the mail. I think during COVID, the mail access has been shut down, but you can go online and get your tax return that way. Again, it's IRS form 4506. And that's a great way.
Yeah. But I have to tell you, I'm always suspicious of people who can cite IRS tax form numbers. You are smarter people than I am.
Oh yeah, they're great, and it's just just makes it so much easier instead of scrambling.
It can take time, though. I do want people to know that the IRS, just like in any governmental body, is not speedy with getting you things. So something to do if you don't have easy access to your joint tax returns, send in that request for those past year tax returns as quickly as possible, because you may wait a while.
Right. That's
Right. So
absolutely
remember,
true.
when it comes to access, even though you cannot access it yourself immediately, there is no reason why we should not be able to get it accessible to you.
Yeah.
It's your right to get this information.
Right.
So,
Good
and once
point.
you're pulling that information together, that I think the next roadblock for people is really understanding the components of what they're dealing of what that financial picture looks like.
Right. That's absolutely true. And as I said a little while ago, the financial documentation is the lifeblood of the divorce process or negotiating the divorce process. So as you start to collect the documentation, it's very important that you stay engaged and learn the components of what would be considered marital, separate, joint, things like that. So a broad overview of the important financial documentations are, like we were just talking about, income tax returns. First and foremost, that is probably the document you want to track down for probably 3 to 5 years. Pay statements, bank account information, brokerage account statements, loan applications. Loan applications can be very important pieces of paper when you're negotiating a divorce. Business ownership records, shareholder agreements, very important. Real estate records, stock options, retirement accounts, pension plan information, credit card statements, insurance policies, trust agreements. The list goes on and on from there. But if you just start, not just once you gain access and you start collecting documents, that's great. But as you start to put them together, become engaged with them. Try to start understanding what they are, because as you go through the process, these documents not only are going to be important to you as getting them to your professional, but it's going to be important that you start to learn what they mean to your divorce. So again, we're going to relate this to a 401k plan.
So like all investments, every investment has a component to it. With the 401k, you have to realize that there's an employer portion of the contribution and there's an employee portion of the contribution. That's important for a lot of reasons. And at the forefront of it is for support calculations. Again, this is a voluntary deduction that you're taking as the employee. So it will affect what your net income is for support. That number can be changed. So you may have found during your marriage, you weren't maxing out, your spouse was not maxing out because you needed more money at home to pay your bills. Now, all of a sudden, during divorce, you'll notice that contribution is getting maxed out. So you want to be able to check that number when we get the statements, which is easy to do as soon as we get the statements. Another component of a 401k is that money is accessible to you through the incident of divorce. You can do a withdrawal from your 401k without the 10% excise tax if you're before the age of 59 and a half. The monies are still taxable, so that has to be reconciled between the two spouses. But if you feel that there's no monies there to hire your professional to go through mediation, hopefully first, or any other process that you have to go through to hire us to help you with your financials, that money is accessible to you. So you should know that is a component of it. Another really big component of this is a tax-deferred investment. There aren't very many tax-deferred investments out there. So it's wise to take advantage of a 401k if it's offered to you through your employer. But you have to realize that if you are negotiating away that asset in your settlement because your spouse is really hell-bent on keeping it, and you really are convinced that you need to keep the marital home, so you think it's an even wash, it's not really an even wash when you take into the tax considerations of that investment. It has to be reconciled. It's a major component of a 401k. So don't overlook that. Again, important information here is the date of hire, the date of separation, and the date of your marriage. Those are important dates to determine the marital portion of the 401k. So if your spouse is saying, no, that's mine, maybe he has a premarital component to it, maybe he doesn't. But knowing the date of hire, the date of marriage, and the date of separation will help us determine that. Another very important component of a 401k. And again, this is one component to one type of investment that you might have in your portfolio. So every investment has different components to it. Be aware of them.
Yeah, it's such a good point. And another point I just want to make for people is valuing the marital portion is going to vary based upon the laws in the state that you're in. So in some states, in Connecticut, where I practice, the date of your separation doesn't matter. We don't value things based on when people file for divorce or when the parties are determined to be separated. They get valued as of the date of dissolution, which is a positive for one party and a negative for the other. So, but there will be different laws, but it's important to understand just because there's an account that says, I make up a number, $200,000 in a 401k, some of that may have been earned if your spouse has been with that job before you got married. Some of that 401k may be premarital, as you pointed out. And the law of your state is going to apply to whether or not that portion that was earned before you got married is considered marital or non-marital. And then the increase in income, or, it earns money over time. So there's a lot of different components to that factor, but the key part is pulling it all together and understanding the components, getting the information so your experts can figure that out for you.
Right.
Exactly. Good point. Yeah, state to state, it varies.
Yeah, quite drastically in some. Being a practitioner in California and Connecticut, one's equitable distribution, one's community property, very different.
Yes.
Under those two. Well, and that goes to maybe the next roadblock, which is interpretation.
Right. So now that you've learned, you got your access, you got your documents, you're feeling good about now, what do they mean? And one of the first things that a lot of people do is fill out a financial disclosure or fill out a budget or an intake form for a mediator or whatever it may be. And something that we like to caution people about is please do not guesstimate. You have your documents and the data is really important for a specific reason. So it's not really a good idea to round up or round down because all of that data is going to be relied upon. So and to what we were already speaking about previously in the components, some of those documents contain very important information that may not be apparent to you until you really get to know how they relate to your divorce. Dates, times, places, amounts, payees, and other details can become critical pieces of data as you move through the divorce. The value of assets at the time of marriage may be important, especially if it's marital or community property to be divided, and whether it's going to include appreciation or not. And Susan, you just went over that really well. So sometimes you need documentation for a longer period of time because your professional needs to interpret that data as it relates to the division of marital assets. For major documents such as financial statements, tax returns, brokerage accounts, you may want every single page you can put your hands on, because again, there's data that Catherine extracts data like no one I've ever seen. She just zeroes in on something I would never even guess. So it's really important. So make sure that you have it collected, you have it gathered together and in a place that your professional can interpret it for you so that you can definitely understand what it means. So yeah, we're going to go back to that 401k statement again as it relates to interpretation.
Yeah, do your magic, Catherine, with that 401k statement.
Incredible.
Well, one of the great things that I love about investment statements, as an investment planner for so long, but one of the things I love is when there's 13 pages and for some reason, page number 8 and 9 are missing of the 13, but they're giving you everything. And on page 8 or 9, and this is not really for 401k, this is really for a taxable investment. A lot of times they'll show what that investment had in long-term and short-term capital gains for the year. That's important because if you're taking that investment as part of your distribution, that's a taxable event that you'll get hit with when it comes to April of the following year. I have seen countless people not really care about that. And then here comes April and they're responsible for the tax gain on that, which could be 20, 30%. I don't know what your tax bracket is, right? So now they've negotiated away probably a tax deferred investment like the 401k to keep this one because they wanted the cash in hand and never considered what was on page 8 and 9. And don't quote those pages. I'm just pulling those out of my head right now.
Right.
The other thing is you'll see the investment advisor's fees on a page, so an investment advisor, you should always check what their fees are. But again, there's just certain information that's missing on certain pages. So I find it interesting when we get 13 and we're missing 2 very important ones. But when it comes to a 401k, you have to know, and actually this works for any investment also. I remember a client that we had, and she unfortunately should have been through mediation because they wanted to start that way. And it ended up that they ended up going to litigation. And I swear if I was a betting woman, which I kind of am, but I was not betting at the time, I would have bet my house that if she would have had financial clarity, they would have been through mediation. And from the time we met her to the time they ended up settling, she was so convinced that he was hiding money because she said he has 11 different accounts. There's 11 accounts. And Karen and I are like, what is she talking about? So we go through the statement and I realized, and I remember the day I said to Karen, I know what she's talking about. In her investment account, there were 11 different components or different investments within that account, but it all made up the one value. She just didn't understand that. She's a smart woman. She just didn't get it. So when I counted up and it was 11, I really felt proud of her because she did realize there were 11 sub accounts. The only thing that was not made clear was that it all was the one sum that was definitely disclosed. But she must have had tons of communications with her attorney paying for it because we saw her bills just to try to get this clarity. Very important component of understanding what the investments are. And same thing with the 401k. It's different than a 403b. It's different than an IRA. It's different than your government pension. There are different types of vehicles out there, and know that you can have one or multiple. You can have a 401k, but that doesn't mean you don't have RSUs, restricted stock units, and options or a grant. You have to see the employer package because a 401k, if your spouse says, yes, here's the 401k, this is what we have. Don't forget to ask about the other deferred employee compensation packages that can also go along with that.
I'm going to add one more line item to that as well. Just I'm a Quadro administrator, so I'm often involved in writing that document that separates 401k accounts. And we actually run into a lot of attorneys who don't understand that IRAs do not need a Quadro to divide an IRA. We also run into a lot of situations where a spouse or our client even will have multiple 401k accounts from prior employers. Sometimes it may be a good idea to get those rolled over into an IRA before splitting so you don't have to go through the Quadro process. It's a much easier pathway to divide an IRA than it is to divide a 401k plan. So again, the interpretation of the documents, if you know what you have in front of you, there are some steps you can take to either understand them better or manage them during the divorce process, because retirement plans specifically requires, special, what word am I looking for?
Vehicles. I always
Thank
call it a
you.
vehicle.
Yeah, to get those divided between
Yeah.
spouses. Yeah.
I will say, Susan, with the NPS financial portrait, this component or roadblock is probably the one I'm most excited about, because we do have a report that the mediators get to work with their clients, and it is the recommendations and considerations. So if you're listening to this and you're fearful that, oh no, I don't know all those components and I don't know what they're comprised of, that's in one of our reports. We do go through every asset that's in your marital settlement agreement. You're not there yet. In your marital estate, and we go through some recommendations and considerations for each account.
Well, and great point. And what I was going to say is I want people who are listening whose heads are spinning right now because they've now heard 401k, Quadro, 403b, IRA, all of the RSUs. First of all, for some reason in financial world and legal world, we do like to shorten everything down to an acronym, which makes it very difficult for us. But if this is all sounding like we are speaking a foreign language to you, that is not, cut yourself some slack. This is what we deal with every single day for years and years and have training in, but that should show you what you don't know and why you need to get some professional help to help you deal with the 5 roadblocks that we're talking about. The fact that Catherine can wave her magic wand over a statement and pull out the magic information that you need to know, is we're making a joke about that, but it's not. Oh, and actually, Karen, you just said you've run into attorneys who don't even know there's a difference between an IRA and a 401k in dividing it, that one needs a quadro and one does not. I've also sadly run into that situation and question the competence of that practitioner, because it's something that we as legal professionals should know. I do have one quick question, Catherine. We were talking about those statements. So they're missing page 8 and 9. We see that. But every statement always has at the very end a blank page that says, this page left intentionally blank. Why the heck do they have that extra page at the end? Because we get into legal fights over that stupid page because it's always missing. They're like, well, we didn't send it to you because it was blank.
Yeah, well, you should send it to, because for me, in my belief, and for as long as I was a financial planner, I believe that was the end mark, the second bookmark to the ending of the document. So if that's not there, how do we know something isn't missing?
Great point. And that's exactly what another financial advisor had said to me, because I was like, this is just a waste of paper. They're killing another tree with this. And they said this actually marks the end of the document. So,
yeah.
So let's move. The next roadblock is really this it sort of references back to what you were talking about not only understanding what's there, but now, and having recommendations as you do in your portrait, the options that you have. People feel like this is, it's just cut and dried. It's going to be, you split everything in half and we're done and we move on. There are a myriad of options when it comes to financial issues. So let's go through that roadblock.
Oh, and that's the most fun, if there is a fun part of this. And I know divorce is not fun, but it's a relief when you know you have options. But the way you have options is because you're going to do the work of gaining access, of knowing the components, of knowing how they're interpreted, because there's a definite payoff because you're going to know your options. And it's important to know what you have, the multiple ways the assets and debts can be divided as it relates to tax consequences for you, capital gains, cash flow, whatever the it may be. If you're dividing even shares of investment accounts, which lots and shares do you want? Guess what? You get to have a say in that, especially if you have a professional who's helping you and guiding you with that. Again, with those table of considerations that Catherine talked about, that kind of information is addressed there. Understanding various scenarios of division from a cash flow and a retirement perspective, because all of those areas of your life you need to have covered post-divorce. How am I going to live now? How am I going to live in the future? And the very cool thing is you get to curate a settlement that works for you. The word curate has become very trendy and popular lately, but it's true. You get to have a hand in curating that settlement that works for you and knowing the various options you will have to accomplish it. So we're going to go back to the 401k plan and talk about options there.
So I mentioned one earlier, the 401k. You do have an option if there is a hardship clause through the incident of divorce to access that money sooner without the penalty. Although taxable, you wouldn't have the penalty. But you have to know that your spouse also had the option during this time in preparing for divorce to make liquidations from that 401k. There's a difference between a liquidation and a loan on the 401k. So a lot of times I hear people say, well, did you liquidate anything? No. Well, did you take a loan? So there's two different things to ask. And if somebody isn't asked something, I realize they don't answer the question. So we have to know the questions to ask a lot of times. You also have to know that people trade away what the net result of this investment means after taxes in the future. We see some attorneys do it, some mediators do it, some don't, and they leave it up in the air. Meaning, if I have $100,000 and I'm going to keep my IRA, that position sometimes ends up saying, well, I think that the value on my side should only be 80,000 because I'm going to pay 20% in taxes. So let's just discount this IRA to be, or 401k to be worth 80 instead of 100. Now, if you're in retirement, maybe that sounds necessary because you are taking the income and you are paying the taxes on it right away. But if that's an asset that's not going to be utilized in 20 years, why are you discounting it now? You have to consider what the market potential is for that account in the future. You also have to consider what your retirement age would be. And you have to consider what your investment that you're keeping, the taxable investment, would grow to be worth as well. There's a lot of reconciliation is what I'm trying to tell you. It's just not black and white there. You don't have to agree to all of this. You have to know what your options are, and you have to see them in front of you, financially speaking, before you make that decision. Again, we talked about combining them into maybe a few IRAs, so you don't have to have so many quadros. That's another option for you. But the most important I want to say here is, because I see it so often and it really frustrates me, is when one spouse, and unfortunately, particularly the female spouse, if she is not the wage earner, doesn't believe that she has an option to have that 401k. You know, I hear it, Susan, so often where they say, you know what, we never saved anything in my IRA, so I don't have an IRA. You know, I was taking care of the kids and I gave up my career, so I stopped adding into any kind of retirement, and now he has that retirement. Well, that's not the case. You have an option to get a portion of that, and make sure that you're aware of it before you feel defeated that you've done something wrong, because you haven't.
Yeah, that is a common misconception on the part of the non-earning spouse, is the legal phrase, or one of the ways that we reference that. And unfortunately, often, especially in a divorce situation, the spouse who did earn the IRA or the 401k or put the money aside, was the breadwinner, will often play into that and say, well, no, that's my 401k, that's my IRA, you don't get any part of it, it's in my name. So it is really important for people to understand that if it was earned during the time you were married to that person, even if your name's not on it, you likely have some interest in it. And I think, you know, another valuable point for people that you made here, both of you, is that I like that word curate. Maybe it is overused these days, or at least is very trendy, but if you know where you're going in your future and where you are in life, it strikes me, you know, someone getting divorced in their 30s is going to have a different future plan than someone who's getting divorced in their late 50s or 60s. And you can curate a divorce settlement that will help you along that path. You might want more retirement, or less retirement, but more support, depending on what you have happening in your life. And that's the beauty of the options. Now that you know everything you have and you have some concept of what you're looking for in that future, you can start curating a settlement that will work for you. And I think that's the beauty of working with professionals who can actually lay this all out for you, so that it's not just, you know, walking through the apples and oranges of your assets and chopping everything in half.
Right. Oh, please don't do that. Yeah.
You know, but
I
you
beg
run
you.
into people. Yeah, you run into people who think that that's the fair way to do it. The other point to make, I do want to point this out to people. You kind of referenced it, Catherine, when you said maybe you want to roll those 401ks over into an IRA, or maybe Karen, you said it. If you are cooperating with your spouse and have good financial advice, you can often save money for both of you by making good choices and making financial moves to minimize tax consequences, to, you know, minimize the cost of each quadro. If you had to do a bunch of quadros on a bunch of 401ks, they run between $500 and $750 usually to do a quadro. If you have to do 5 of those, as to it's free to do a rollover of an IRA, you could save a few $1,000s by rolling everything into the IRA, purely because you recognize the issue and you cooperate in effectuating it. But you need the advice, the financial expertise to tell you that that's an option and that's a way you could save the money.
Absolutely.
You know, I would like to go back on something that you said, which I think is so great, and I'm glad you said it. The most important part of knowing the options is knowing what your future goals are, right? So we're all, and listen, I've been through divorce myself, so I totally get this. We just want it done. Get me through to the end and let me be finished so I can move on to my life, whether it's going to be better or worse, you don't care. You just want to be finished.
Yes.
But if you don't know, don't know what your future goals are, how are you picking the option that's best for you and your family? And when you're a 30 or 40-year-old, it is very different than being a 50 and 60-year-old. And so how do you make those decisions? And a lot of times those 30 and 40-year-olds are listening to 60-year-old family members who've gone through it already. So their goals were different. You have to really know what's in front of you, what's the data in front of you, and what am I looking to do with the rest of my life? And how am I going to get there? What's my best option, right? So that's so important. And the same thing with what you just said about having this information and the cost that you're saving by just combining it if you can. It goes way back to the accessibility with the discovery process. Why are we paying two professionals to gather the same information? You can't make up the information. It's the same document. So you're paying 10 grand on each side just to complete accessibility. If you can cooperate, like you said, which I love that word, with your spouse from the get-go, you're going to save yourself thousands and thousands and thousands of dollars just making that information up here in the forefront, because you're going to have to give it anyway. So you might as well give it in this way.
Yeah. And even if you disagree later, even if it becomes a court battle, you want to go to mediation, maybe it doesn't work. The documents aren't going to change. The data is not going to change. So there's not going to be a hindsight, oh, I wish I would not have gotten that document. That's never going to be the case. Right. So that's so important.
And so many people, I think, just, labor under an illusion that divorce happens by, I've decided to get a divorce. I go to an attorney, I hire an attorney, and the attorney does everything. And that starts with that collecting of the data. And right from the get-go, then you might as well just, whatever you gave in a retainer is probably going to be gone in the data collection phase. And remember, I mean, there are certainly attorneys out there who have financial backgrounds as well. I have attorney friends who are CDFAs like you, Catherine, as well. But the vast majority of us can't balance our own checkbooks. We rely upon, okay, I can balance my checkbook, but we do rely upon financial professionals ourselves. But when we have to go through the legal side of the access issue and fight for that paperwork, you and your spouse are costing yourselves, depleting your marital estate by thousands of dollars by making it a fight. And that's to both of your detriment. So if you can cooperate in pulling it all together, and cooperate goes to this last and final roadblock that we're going to talk about. So it's a good segue here, because the last and final roadblock is the compromise phase. Because now we've talked about, well, you've got a plan, right? You know what you want. How do you get what you want? And I'll tell you right now how you get what you want. You get it through compromise.
I agreed.
Yes, right? So compromise is the fifth roadblock, or the fifth component that we're going to talk about.
Right, absolutely. So we call 1 through 4 the blueprint. That's where the MDS financial portrait comes in. All of those 4 potential roadblocks are covered in the MDS financial portrait, so that when you get to that next phase of negotiation, mediation, or litigation, you know the width and breadth of your ability to compromise, and you know what every single compromise will mean to your financial estate moving forward. So, again, we say, once you know what you have, once you know how to obtain them, making sure you have enough information so that all the debts and assets can be interpreted from all the perspectives, you're ready to negotiate with confidence. And I always say, and Susan, you said it way better than I'm going to say it again, you just don't want to leave that in the hands of the discovery process, because the discovery process often leaves most couples or individuals with, we used to call them red wells of paper and paper and paper that has to be reviewed and reviewed and reviewed and updated and updated and updated. And You may end up with a net worth statement. A lot of people say, oh, well, I have my spreadsheet. It's so much more than a net worth statement. The data you need to know and the information you need to have when dividing assets in divorce. So having a blueprint that's, all packed up and ready, and you understanding it, you will be so empowered to compromise with confidence. So Catherine, take it away with the 401k example.
Same thing with the 401k, and I'll talk about compromise also because it's really important. You go into the divorce process either feeling very revengeful because you're hurt, or you're feeling like you just don't want this, so you prolong it, or third, you're feeling, I want to get through this as quick as I can. But when you're faced with just a net worth statement, or you're just faced with email exchanges, which I see a ton of because they're asking us to assess their email exchanges, which has financial data in it, which I sit here like, if I can't follow this thread, how is somebody who's emotionally charged following this thread? So I find that to be a whole nother podcast we could talk about.
Okay.
But imagine you have access to the information. You understand the components of everything that's involved, and you understand what your options are to move forward. You'll be able to, in an emotional moment, because I don't care which one of those three people you are, this is emotional. Divorce is so difficult. I'm the one that wanted the divorce and I cried my eyes out, right? Mm-hmm. So when you know it all out there in front of you, you're able to compromise because you have to compromise. That's part of divorce. Not everyone. Susan, I don't know if you've ever heard it, but I'm pretty sure Karen and I have never heard that, yay, we got everything we want. Let's go. It's so much fun now. You have to do a little give and take here. But it's really great to know that when you're put out three options because you're good with all three of them and you let the other party pick which one, you're going to feel like a winner. You're going to be able to move on much better in your life. So compromise to me is probably the most fruitful part of the whole process, because you get to walk out there feeling like you did the best you could at the time you were doing it, and now you're just going to move on, but you made really financially clear decisions and you could take care of your emotions after that.
Yeah, or separate from that. But I love what you just said, because when you have those options and you're making compromises, you make decisions that you choose what you can and cannot live with, as opposed to, worst case scenario, a judge deciding what you're going to live with or not live with. But the other good point, I think, Karen, you made this, is, one of the things that you provide is that portrait, that financial portrait. So as opposed, I just want people out there to consider, because this is my world back when I was litigating. I would get a case. These people would have a fairly complicated financial situation. So I would look over onto my sidebar in my office, and I would have 3 or 4 boxes full of paperwork that came in on all this stuff that we've been talking about. So keep in mind, I was billing at a fairly high rate per hour. So for me to sit down and go through all of that data, or pay one of my associates or one of our paralegals who handled financial data to pull that all together, you're paying for all of that time to pull all of that together. And then for me to review. So even if somebody else on my staff was pulling it together, you're then going to pay for me to review what they did, because I need that information. I need to know what's in your financial picture and to understand it at the level of what you two are talking about. That not only do the clients need to understand it, I as their counsel do, as opposed to bringing it to the two of you who are professionals who put it into this beautiful little package, that then gets handed over to the attorney or the mediator, all fully digested and pulled together and understood by people who actually understand the information. I don't think I can really give you a better viewpoint of the 3 boxes on my credenza versus the nice, concise, already digested information that you get from your portrait. It's night and day.
It is. And I'm going to add to the portrait the documents to support that, inventoried and organized. So you as a counselor or a mediator can just say, you know what, I need to go see that Merrill Lynch statement that ends in 4936. Oh, there it is. It's organized to that level of detail as well. So it just makes everything so much easier and more efficient, because efficiency is so important in the divorce process, because as we were saying, things get outdated very quickly and they have to be updated and updated and updated. So yeah.
I mean, that I really can't emphasize to people enough just how important this part is. That I have been in cases where the discovery process, as we call it, the collecting of the data and then the digesting of the data, which by that time, then the data is out of date, as you just said. So we need more data so that we can then redigest it. That can take years and years of the process. A divorce that's not even that difficult or complicated can take forever. And in the end, the people who end up benefiting are the legal counsel, and because they're charging for all of this time, but unfortunately, it's coming out of your marital estate. It's being depleted every time one of our bills goes out. So it's the service that you're doing for people or providing to people is something that is a game changer, and I don't know anyone else who's doing it.
I want to back that up, because being a financial, we work with the other financial planners. So I don't have my FINRA license any longer. I don't invest the money for our clients. So I'm truly a neutral in the process. But it's interesting, I'll hop on with the other financial planners, because financial planners are very valuable, and other CDFAs who are building up their practices are very valuable after the process. We come with it with a non-biased process, because what the financials sometimes do is they come at it with their professional opinion of what they think you should do with your life moving forward, which is great. But what they're not doing is they're not understanding what the whole compromise piece part of this would be with their mediator or their attorneys. So when our portrait is completed, the financial planners have been loving it, because they're seeing what the marital estate was. Now they get to see a report of what the marital estate looks like now, and how can I work with my client to move this, for their future financial planning. So it really, again, serves as the basis or the groundwork for your future financial planning. We've even had some couples who decided not to get divorced. They used it for their estate planning. We've had mortgage advisors use the portrait, because all the documents and all the information is right there for them to give. They don't have to send all these different paperwork and different pieces of email exchanges. So we really are very passionate about working with the whole team, but we are really passionate about getting in here and making it a neutral part of the process to save the parties a lot of money, so that they can then later take it and use it to move on.
Absolutely. That's such a good point, Catherine. I remember last week we had a client who she just finished up everything and she's moving ahead, and she just came back in with us to tell us her progress. But she said, I took my portrait to my mediator, and they were dividing a business, and we took it to our accountant and he used it for that purpose. And then we took it to the mortgage advisor and we husband refinanced the house. And now it's in the hands of my financial planner, again, moving forward. So it just becomes like the Bible of a couple's dissolution.
And then the mediators are loving it, because it's coming from a neutral place. It's not coming from husband's financial planner who did the spreadsheet to give you that, or wife's financial planner who says that she should have this, because then the mediators were getting upset because they're kind of jumping in before any negotiations have started. So this really keeps everybody on a level playing field that can later be used for their own individual purposes.
It's an incredibly valuable tool, and I highly recommend people, especially, we are taping this, so we're still in January. I think it's going to air in February, but we are in that time of year where notoriously people are contemplating divorce. If you are in that moment, sit down with your spouse and talk about taking the approach of contacting My Divorce Solution and getting your own portrait done, working through those 5 roadblocks or those 5 steps, so that you too can save that money, work cooperatively, and end up with a financial plan which involves your settlement that helps you both move forward and helps your family move forward. I mean, it's really, it's such a valuable tool.
And could I add one point to that?
Of
You
course.
brought up a really good point. It is that time of year. If this comes out in February, right now, today, I received my first tax document for next year's tax return. So if you're thinking divorce and you don't have accessibility to accounts, recognize some statements that will be coming in. Now, granted, a lot of things are paperless, but there are still things coming in through the hard snail mail. Is that what we call it?
Yes.
Ask your spouse, can I see what was in that envelope? If they say no, that's a red flag. You should be able to see anything that comes into the household and take a picture if you see it lying around, so that you can have it for later. It's called nesting some information right now.
Yeah, it's an important part. There's always a paper trail when it comes to finances. But people, when they contemplate divorce in their future or feel that the relationship might be troubled, people start to get sneaky and they start to try to do things. So, that is a definite red flag and something to be looking for. So one thing I want everyone to know, for those members only out there, members of the members only community, Catherine and Karen are going to be joining me behind the curtain, and we're going to take some deeper dives into these financial areas, and going into more, as you can tell, we've got some experts here. So we're going to be giving you some more expert information on divorce and financial aspects of your divorce process. So visit the community, or join the community if you're not already a member to access that. But you do have a wonderful online course that you are offering to listeners. So if you could run over the information on that, and thank you. It's a wonderful opportunity for listeners.
Sure. So our gift, we have an online course. It's comprised of 12 what we call lessons, and multiple worksheets, really created to help you understand the language, the different situations you may find yourself in the divorce process. And it's me and Catherine teaching it. So it doesn't have any law. It's not state specific, but it's just those areas that you may encounter as you go through the divorce process, to kind of give you a reference point when you need it as you're going through it. So from 30 days from the date this podcast releases, you will be able to access our online course. The promo link will be Divorce and Beyond, and it's available to all the listeners.
So they will send you an email. Is that the way to get in touch with you for that program?
Yes, they can email us at hello@ck11.net. So that's ck11.net, hello@ck11.net.
I'll put that in the notes. I want you to explain why you use hello@ck11.net, because you explained that to me, why that's the email address you use. And I thought it was brilliant. So if you wouldn't mind explaining that.
Do you want me to go, Catherine?
Sure, go ahead.
Okay.
Yeah.
Well, when people are going through the divorce process, obviously they need it needs to be highly confidential. So we created the email ck11.net to allow for privacy, so that you're never getting an email from my divorce solution. Your privacy is always of paramount importance to us, anytime, any place. As a matter of fact, we make sure before we take any data from anybody that the phone numbers are private, the email is private, if you're feeling vulnerable at any time, because it is a very vulnerable position for a lot of people, especially if they're just exploring and are not sure they're going to take that step. So that's just one of our ways of making you feel secure working with us.
To me, that says it all, that you ladies have thought down to that level of detail, of service to your clients and helping your clients. To me, that says it all. Really, it does. Clearly, these ladies know what they're doing, and we'll be able to help you. You understand the vulnerability of people who are in the position. So I just thought that was an important. It seems like a little thing. It's actually not that little a thing. I've had people, who have asked for my card, but when it says Divorce and Beyond, the podcast name on it, they're like, oh, I can't take that home,
Right.
something like that. So I have business cards that are just very neutral with just my name on it. And my neutral, Susan Guthrie, Esquire.com email address so that they wouldn't know it was divorce related. So I appreciate that. Well, ladies, thank you again so much for coming and joining me and sharing this information with my clients, and especially, or with my listeners, and especially for coming back. I'm looking forward to the deeper dive that we're going to be able to do for the members only. Thank you.
That'll be fun. Thank you.
Thank you.